In this video, we'll discuss a 1-minute gold scalping strategy using the supply and demand technique. Besides being applicable to the 1-minute time frame, this strategy can also be utilized on any time frame of your choice. Because fundamentally, this trading strategy can operate on all time frames, allowing you to use it for scalping, day trading, or swing trading. Additionally, this 1-minute scalping strategy can work with various assets, including gold or XAU USD, Forex, cryptocurrencies, and others. So, don't miss out on this video. And please support this channel by liking and subscribing. In the concept of trading in the market, it's crucial for us to understand the concept of supply and demand. Supply refers to the amount of an asset available for sale, while demand represents the quantity of an asset that can be bought in the market. In other words, if the price reaches a supply area, your main focus should be finding the best point to place a sell order. Conversely, if the price reaches a demand area, your primary focus should be finding the optimal point to place a buy order. Now, open your TradingView application and go to the Indicator Search tab. In the search bar, type Supply and Demand Visible Range. Then, select Supply and Demand Visible Range by Luxalgo. This supply and demand visible range indicator will provide marks for supply and demand areas that you can use to identify supply and demand zones in the market. The indicator will continuously update, allowing you to monitor supply and demand areas for order placement. Next, go to the Indicator Settings tab. Under the Input tab, change the threshold value to 5. Also, adjust the resolution value to 40. Then, disable the checkbox in the Equilibrium tab, for the colors of the supply and demand zones. Customize them according to your preference. Once done, click OK to confirm the changes. Using this indicator is straightforward. When the price candlesticks are in the supply area, focus on finding the best point to place a sell order. Conversely, if the price candlesticks are in the demand area, your main focus should be on finding the optimal point to place a buy order. Now, let's add the second indicator that will guide us in placing buy and sell orders in the market. Go to the Indicator Search tab and type RSI Divergence. Then, select RSI Divergence by Matsu BitMEX. Next, enter the RSI Divergence settings. Under the Input tab, change the RSI length to 20. Then, for RSI EMA select, choose EMA. Similarly, for BBMA select, also select EMA. Now, move to the Style tab. Under the Style tab, disable the checkboxes for centerline, divergence, and hidden divergence. Then, adjust the indicator colors according to your preference. Once you're satisfied with the settings, click OK to confirm the changes. This RSI divergence indicator will serve as a guide for placing buy and sell orders in the market, complementing the supply and demand visible range indicator. We'll be using RSI bullish divergence and RSI bearish divergence as signals to buy and sell in the market. Bullish divergence occurs when the price forms a new lower low while the indicator forms a new higher low. For example, here we see that the price has formed a new lower low, moving lower than the previous low point, while simultaneously, the indicator moves in the opposite pattern, forming a new higher low. On the other hand, bearish divergence occurs when the price forms a new higher high while the indicator forms a new lower high. In this scenario, the signal line forms a new lower high while the price forms a new higher high. We've already extensively discussed RSI bullish divergence and RSI bearish divergence in a previous video. You can refer to that video before continuing with this one if you're not familiar with these concepts. In this scalping strategy, you'll only place orders if divergence occurs within supply and demand areas. For example, if the price candlestick is in a demand area, you'll look for bullish divergence to place an order. Conversely, if the price candlestick is in a supply area, you'll first look for bearish divergence before placing an order. If bullish divergence and bearish divergence occur outside of the supply and demand areas, ignore the signals. Now, let's discuss how to place buy and sell orders using this supply and demand trading strategy. How to place buy orders. 1. If the price candlestick is in a demand area, your primary focus is to look for bullish divergence. 2. Once bullish divergence is formed, meaning the price forms a new lower low and the RSI signal line forms a new higher low, prepare to place a buy order. Three. Ensure there's a rejection of price at the demand area. 4. As confirmation, ensure the candlestick formed is bullish. 5. If all conditions are met, you can place the buy order after the bullish candlestick is closed. 6. Place a stop loss below the demand area. 7. Then, use a target take profit with a risk and reward ratio of 1:2. How to place sell orders. 1. If the price candlestick is in a supply area, your primary focus is to look for bearish divergence. 2. Once bearish divergence is formed, meaning the price forms a new higher high and the RSI signal line forms a new lower high, prepare to place a sell order. Three. Ensure there's a rejection of price at the supply area. 4. As confirmation, ensure the candlestick formed is bearish. 5. If all conditions are met, you can place the sell order after the bearish candlestick is closed. 6. Place a stop loss above the supply area. 7. Then, use a target take profit with a risk and reward ratio of 1:2. Always maintain proper money management and trading psychology, as no trading strategy is 100% perfect. That concludes this video, and see you in the next one.